Now speaking, Hanyu Lu, Investor Relations. HUYA held their first quarter 2023 earnings conference call today. Participants included Mr. Rongjia Dong, Chief Executive Officer of HUYA, and Ms. Ashley Wu, Vice President of Finance. Financial and operational results are posted online at ir.huya.com. A replay of the call will be available later on the IR website. The discussion featured forward-looking statements made under the safe harbor provisions of the U.S. Private Securities Litigation Reform Act of 1995. Audited GAAP and non-GAAP financial information was discussed, with a reconciliation of the unaudited non-GAAP measures. Now speaking, Ashley Wu, Vice President, Finance. On March 31, 2023, HUYA had 3.41 billion Chinese yuan in cash and cash equivalents, restricted cash, and short-term investments. HUYA achieved steady development in the first quarter of 2023, maintaining its user scale year-over-year and delivering total net revenue of 1.95 billion Chinese yuan and non-GAAP net income of 85.5 million Chinese yuan. Despite seasonal headwinds and a soft micro-environment, HUYA continued to make improvements in content offerings, products and technologies. HUYA Live mobile MAUs reached 82.1 million in Q1, up slightly compared with the same period last year. Sales and marketing expenses decreased 37% year-over-year due to prudent spending. HUYA Boom Night successfully launched its virtual stage for the first time, introducing creative interaction features such as fan camps and virtual graffiti tools. Interactive games are gaining more traction, enabling broadcasters and viewers to engage in real-time competitions. HUYA broadcasted around 55 third-party professional esports tournaments and 15 self-organized esports tournaments and entertainment PGC shows, generating total viewership of approximately 477 million. Cost of revenues decreased by 21% year-over-year to 1.69 million Chinese yuan, primarily due to decreased revenue sharing fees and content costs, as well as bandwidth costs. Operating loss was 51 million Chinese yuan for Q1 compared with 60 million Chinese yuan for the same period of 2022. Non-GAAP net income attributable to HUYA Incorporated was 86 million Chinese yuan for Q1 compared with 47 million Chinese yuan for the same period of 2022. On March 31, 2023, HUYA had 3.41 billion Chinese yuan in cash and cash equivalents, restricted cash, and short-term investments. For Q1 of 2023, our non-GAAP net income margin was 4.4%, with the diluted net income per ADS of 18 Chinese yuan and non-GAAP diluted net income per ADS of 35 Chinese yuan. As of March 31, the company had 10 Chinese yuan. HSBC analyst Richie Sun inquired, have the reopening of offline entertainment activities impacted user behavior and consumption on streaming platforms such as HUYA? Chief Executive Officer Rongjia Dong replied, there was an impact of external factors on users and streamer behavior on our platform in the first quarter of this year. The Chinese New Year period usually leads to reduced frequency of streaming and corresponding events, which affected viewing. Additionally, due to the early Chinese New Year and the infection numbers of streamers, user and streamer behaviors were impacted. As prevention and control measures improved, some users and streamers shifted to offline entertainment activities, leading to fluctuations in viewing times and consumption on the platform. We believe these impacts are temporary, and overall we expect user viewing to recover and become more stable. In the second quarter, vacation periods increased traveling and other entertainment activities, causing further fluctuations to viewing times on our platforms. We plan to continue monitoring user and streamer behaviors and provide appropriate content and operational activities, while fine-tuning our content and product to strive for increasing user participation and maintaining a year-over-year growth in user scale. China Renaissance analyst Yuan Zhang inquired, have the live streaming and non-live streaming revenues increased in 2020 compared to previous years? Ashley Wu replied, in the last quarter's earnings call, we reported that live broadcast revenue in the first half of the year was weak due to macroeconomic factors and policy impacts. We noticed that the decline was narrowing due to our operational efforts, and the current increase in offline activities may also have a short-term influence on revenue. We remain optimistic for economic recovery and new game launches, which should help promote new forms of broadcasting and improve monetization overseas. Advertising revenue in Q1 was low due to seasonality in the macro environment. We expect it to recover with the market and game launches, while also optimizing video content in the game community for future increases in advertisement and monetization. Bank of America Merrill Lynch analyst Lei Zhang inquired, have new game supplies had an effect on your live streaming business this year? Also, what updates can you provide us on your cooperation with Tencent? Chief Executive Officer Rong Jiadong replied, "We have established a close relationship with Tencent to better promote their games and esports events. We are finding ways to collaborate with Tencent to increase user expansion, promotion opportunities and revenue." Credit Suisse analyst Jasmine Wang inquired, "Have cost-saving efforts in 1Q had a positive effect on COGS and OPEX for 2020? What is the profitability trend this year?" Ashley Wu replied, "In Q1 of this year, the market competition environment remained similar and the sharing ratio was maintained. Fine-tuning of sharing policies enabled different levels of sharing according to performance and demand. Signing fees were reduced due to stricter analysis and control. Cost of copyright events and self-organized content decreased due to more stringent screening and better terms on copyright agreement. Gross margin improved from quarter-over-quarter and is expected to surpass 2022. Total operating expenses decreased by 26% YoY and 7% QoQ for 4 consecutive quarters. Net profit in Q1 and aim for further narrowing of losses and improved profitability for the whole year." Jefferies analyst Thomas Chong inquired, "Have regulations around live streaming impacted our business?" Ashley Wu replied, "HUYA has continued to strengthen its position in the live broadcast regulatory environment, which has not changed much compared to previous quarters. Regulations remain stringent in regards to protecting minors and streamer/user behavior content. HUYA has adjusted their products and operations accordingly in order to meet policy requirements set by the government in May 2020. Revenues were affected in subsequent quarters, but this is expected to decrease in the second quarter of 2021. HUYA will continue to monitor policy changes and adapt their products and operations accordingly." Hanyu Lu replied, "I'd like to thank everyone for joining us today. If you have any more questions, please reach out to HUYA's investor relations team via the contact info on our website or the PIAC.